So, what if I told you that a lot of what Wall Street preaches is, well, just plain wrong? Today, we're going to challenge those ideas head on. We're diving into Warren Buffett's own writings to bust some of the biggest myths in finance. Let's get right into it.
And this quote, it's pretty much Buffett 101. It's the core of his entire philosophy, a masterclass in contrarian thinking. It sounds simple, right? But man, is it hard to actually do. See, it's not about being smarter than the market. It's about being more disciplined than everyone else when they're all panicking or getting way too excited.
Okay, so to really get Buffett's genius, you first have to understand what he was fighting against. Let's call it the enemy, the dominant theory that he so famously and publicly rejected. Back in the 70s, this new idea basically became, in his words, holy scripture on Wall Street. That scripture was called the efficient market theory, or EMT for short. The core idea is that the market is basically all-knowing. It instantly sucks up every single piece of news, so a stock's price is always perfectly correct. And the takeaway from that? Don't even bother trying to find a bargain. You might as well just throw a dart at a stock page and hope for the best.
But here's Buffett's classic take on it. He didn't see this theory as some big challenge. He saw it as a massive, glaring advantage. I mean, think about it. If your competition is literally being taught that thinking is a waste of time, it just opens up these incredible opportunities for anyone who's actually willing to do the homework.
All right, so we've seen the myth. Now let's dig into Buffett's counterphilosophy. And you'll see it's refreshingly simple, a total 180 from the super complex theories that still dominate finance today. And that leads to the million-dollar question, right? If the academics are wrong and just blindly buying a bunch of stocks isn't the key to great returns, then where should an intelligent investor actually be putting their energy? And here it is, the absolute bedrock of his entire worldview. Forget the market noise, forget the complicated charts. For Buffett, investing boils down to just one thing: figuring out what a business is actually worth, and then, and this is the important part, buying it for less than that. Price is what you pay, value is what you get. This brings us to a huge distinction that Buffett hammers home again and again. Investing is all about analysis. It's having the conviction that you are getting more in value than what you are paying in price. Speculating, that's just hope. It's a gamble, a blind bet that a price will go up for, well, who knows why. It's completely disconnected from the real underlying value of the business.
So this idea leads us straight into the first major rule of Buffett's playbook. And it's not just a tactic. It's a fundamental shift in how you see the entire stock market.
You know, early in his career, Buffett followed what he later called the cigar butt approach. He'd find a really mediocre business that was just so dirt cheap on paper, it was like finding a used cigar on the street with one free puff left in it. You could pick it up and get that last puff for free, but at the end of the day, you were still left with a soggy, nasty cigar butt. And that's when the light bulb really went off. He had this profound insight about time. If you own a truly wonderful, fantastic business, time is your best friend. It just compounds your wealth year after year. But if you're stuck holding one of those mediocre cigar butts, time is your absolute worst enemy. It just slowly erodes any value that was there to begin with. This is the core of the whole mindset shift. A trader just sees a ticker symbol, a blip on a screen. Stocks are just raw material to be bought and sold, and their only question is, will the price go up? But an owner sees that stock as a piece of an actual, living, breathing business. Their focus is on the long-term health of that company. They're asking a totally different question. Is this a business I truly want to own for years and years?
Okay, so if you're going to own a great business for the long haul, how do you actually spot one? Well, that brings us to Buffett's second rule and maybe his most famous metaphor.
I love this analogy. Think of a great business as a profitable castle. Now, what protects that castle and all the treasure inside it from invaders, competitors? A moat. The wider and deeper and more alligator-filled that moat is, the safer the castle is going to be for a very long time.
So what are these moats made of in the real world? Well, they come in all shapes and sizes. It could be a brand name that is just everywhere, like Coca-Cola. Or it could be just complete market dominance, like Gillette had with razors for decades. It could be a killer distribution system, being the lowest cost producer. Basically anything that gives a company a lasting edge that competitors just can't easily replicate.
Buffett loves to use this quote from another legendary investor, Peter Lynch, to really drive this point home. A business with no moat is it's a sitting duck. It's constantly at the mercy of its dumbest competitor.
And that kind of intense, unprotected competition, it's just a brutal, wealth-destroying place to be.
But here's the kicker. Finding the right business with a great big moat is only half the battle. The other half, and this is the part where most people fail, is having the right mindset, the right temperament.
Buffett loves this line from the philosopher Bertrand Russell because it applies so perfectly to the world of finance. Real success requires you to think for yourself, not just follow the herd. It means being okay with looking a little foolish in the short term because you're focused on being right in the long term.
And this idea completely reframes the whole purpose of the stock market. You know all that frantic day-to-day trading you see on TV? Buffett sees it as just one giant machine designed to relocate money from the pockets of the active and the impatient straight into the pockets of the patient long-term owners.
And this right here, this is the ultimate test for any investment you're thinking about making. It just forces you to ditch that short-term, speculative mindset and think like a real business owner. If you can't honestly say you'd be comfortable holding on for a decade, then you're not really investing by his rules. So in the end, Buffett's entire philosophy really hangs on this one simple question. It's got nothing to do with IQ. It has everything to do with temperament. Understanding the rules is the easy part, but having the discipline, the patience to actually follow them, especially when fear and greed are swirling all around you, that's the real game. So the question is, are you?